Hey, how are you? I'm Duncan McPherson and welcome back to my channel. Today is the second in my four-part video series where I will be giving you a checklist of things to consider as you expand your operations here into Canada. The first video dealt with things for you to consider as you structure your expansion into my great country. And today's video will deal with CRA penalties that you could potentially encounter as you operate under our quirky tax regime. So listen up, because it's very easy for you to unwittingly get caught in one of our penalties up here. And as always, before we get rolling, don't forget to hit that subscribe button and notification bell for more tips on how to survive and thrive in the Canadian tax system as a US business or individual. Or if you'd rather cut through all the nonsense and get expert help right now, contact me through the MacTax.com and let's get chatting. So today's video, I'm going to talk to you about a few weapons CRA has in their arsenal as you carry on business up here. You are unlikely to know a lot of this stuff, so listen up and take notes if you have to. But to give you a heads up before I begin, a lot of this video will discuss more of the common tax penalties that you'll have to deal with. And like I always tell you, if you do a little bit of planning and make sure your bookkeeping is up to date, and if you combine this with some good old-fashioned common sense, you are likely to avoid a lot of the penalties we're going to talk about in here. So let's start off with the basics, shall we? If your US corporation is operating in Canada and owes nothing, but is required to file a Canadian tax return, if you file it late, the penalty is again $25 a day to a maximum of 100 days, ergo 2,500 Canadian dollars. So there's two things I want you to remember here. First, don't be fucking late. And second, it is CRA's policy to forgive the $2,500 penalty the first time you are late. As an aside strategy for you regarding our national sales tax, if you're required to collect and remit the national sales tax but are not required to file a Canadian tax return, you may want to file a return anyways, because your BIN number, that's the Canadian EIN number, sits on their computer with no returns filed beside it. CRA has been known years down the road to send you a letter requesting you to file all prior year's returns. Then you get into a whole bunch of back and forth. Well, wait, we're not required to file. Well, yeah, we think you are. Hey, it's a lot easier just to file a nil return every year. You're buying yourself insurance against a lot of hassles. I have a lot of clients that do it, and I have a lot of clients that do it in the US too. Just take my word for it. File the nil return and let's move on. Keep in mind, whoever is filing your sales tax returns for you can probably file the nil corporate tax return for you as well. It's not a difficult thing to do. If not, call me through the MacTax.com and we'll get all this sorted out right away. Okay, now the next weapon in the CRA quiver is the penalty they'll assess if you file late. If you are late filing your corporate tax return, the penalty is 5% of the taxes owing. Note, it is not 5% per month like the IRS might do to you. Just a one-time 5% for you up here in the Great White North, plus interest until you file and pay. But please be advised though, if you are late 2 years in a row, the penalty jumps to 15% from 5%. Note that this penalty applies in year 2, even if you owed nothing in year 1, but year 1 was filed late. No rocket science here. Either you file on time or pay early and you'll avoid these penalties. The next penalties I wish to discuss are installment penalties. And this one can be dangerous if it applies to you. Unlike the US, if you are late with a single installment, there is no penalty. Just interest until you pay the late installment. Also, in Canada, the installments are based on your previous year's income, unlike the USA, where your installments are based on your current year's income. Note, now, your installment penalty calculation is somewhat obtuse up here because your penalty is calculated annually, and it is a very weird formula. Your penalty is based on the amount of late installment interest that you pay. I get it. It probably makes no sense, right? And yes, it is too convoluted to explain in a video like this. You're right about that too. But luckily, it is a large threshold you need to hit before you're subject to the installment penalty. But if you hit this threshold, the penalty is quite high. I can see CRA lowering this threshold in the future for you, but more on that later. Which brings me to the next item on my list, audit penalties. If CRA comes in and audits you and finds that you just made a few basic mistakes, in other words, there is no gross negligence or fraud on your part, you are only subject to interest, not penalties. However, it should be noted that if CRA comes in, well, guess what? Now they could assess the gross negligence penalty against you at that time. And let me tell you, my friend, your penalty can be huge. Your penalty is the lesser of 10% of your unreported income or 50% of your understated tax. But take it from me, that's pretty easy for you to avoid, because if CRA makes an adjustment one year, just be sure you don't make the same mistake the following year. It's not rocket science. And now may be a good time to tell you, CRA will never admit to this, but The cleaner your books and records, the less likely they are to assess penalties. Let's be honest, though, we both know this. Or at least I know this from experience, and you know it from me telling you every damn video. Penalties you may actually receive from a CRA audit are assessed when CRA finds fraud, gross negligence, or willful neglect. And they are ugly. The penalty is 50% of your understated tax, plus interest, of course. So just be honest and you'll be okay. Okay? And now my final thought for you today. CRA only recently added installment penalties. Before this, you only had to pay interest on late installments. And believe it or not, it is a lot easier for CRA to assess and collect penalties than it is to train their staff on tax law. I'm telling you, in this regard, we are seeing more and more penalties added to the income tax every year up here. And as I've already mentioned to you in many of my videos, CRA is looking to becoming an online organization, and the addition of more penalties is part of this strategy. And unfortunately, these penalties are going to force you to know the law better than them. In fairness to our CRA, they probably learned this from your IRS. In the future, we'll be seeing more review letters, more penalties, and less audits. So as I've been saying in almost every video, number one, keep crisp and clean books and records. Number two, timely pay your installments. And number three, file a little early. You will escape the clutches of CRA if you just obey these three basic rules. All right, my friend, that's it for today. I'm sure hearing some of this stuff for the 1000th time is making your ears burn a little, but so many of your tax problems can be avoided with a little quality planning and a little quality bookkeeping. But let's be realistic. If you watch this far, you're probably concerned about today's stuff, right? So if this is you, don't forget you can always call me at MacTax.com and I will safely get you through this maze of bureaucracy. And of course, as always, don't forget to subscribe for more tax planning tips. Until next time, stay sharp, stay compliant, stay out of tax trouble, and I'll see you on the next video.